the founder of banktothefuture.com, which already is a great name. The social network where people can fund, borrow, raise funds, and invest. Ladies and gentlemen, please welcome Mr. Simon Dixon.
Thank you. It's a pleasure to get this opportunity to present my ideas. I've met quite a lot of you through Foursquare, through the hashtags of iStrategy, and it's great to see you in face as well. But if we have not met already, my name's Simon Dixon. I'm the founder of banktothefuture.com, and I'm the author of the book Bank to the Future, Protect Your Future Before Governments Go Bust. And I got the opportunity to present Bank to the Future, which is going to be launching in March 2012. And I normally speak for about an hour or so. I'm going to try and get it into about 10 minutes, so excuse me if I speak very quickly. But we believe that far from traditional credit scoring, while that will be an integral part of your ability to fund, borrow, raise funds, and invest in the future, we believe that the way you behave online and the actions that you are taking online will significantly impact your financial future. And so we want to create a model around that. So just before I share with you, I'd love to share with you the mission and the vision of what we're actually trying to achieve. So if we haven't met, I come from an investment banking background, and about 5 years ago I started what later became the world's largest online training company for students seeking careers in investment banking. I was very fortunate enough to have angel investment from a billionaire in the UK, which was a very good introduction to business for me. But it also gave me the opportunity to present to a couple of hundred different universities, non-governmental organizations, and politicians and governments about banking reform, an area that I'm particularly passionate about. And when the financial crisis hit in 2007, 2008, it got us a lot of attention. And because we were on the social networks, we built a very large following around banking reform. So we've got a YouTube channel which has about 30,000 friends and subscribers. And we really started to pitch the message out there for what we believe government should be doing in order to reform banking. After banging our head against a brick wall, trying to speak to politicians and explain to them how banking works, we decided a couple of years ago, myself and my wife, to actually create a working model of what we think a bank would actually look like if they all operated the way we believe they have to operate in order to be sustainable. And about a year ago, after attracting the perfect team of financiers, of risk managers, of developers, of innovators, and lawyers, and wrestling a lot, we developed a model which I'd love to present for you here today. So here's how Bank to the Future is going to launch. We're looking to launch 3 products. For those of you that don't know, there's been a massive amount of innovation in finance and social networks over the last 8 years or so, but it tends to be a bit scattered. So we wanted to integrate it into one social network financial institution. And the 3 products that we're launching, has anybody come across crowdfunding? If you could raise your hand for me. Well, for those of you that don't know, a few of you have heard of that, crowdfunding is the model where if you don't have a credit rating, you could potentially raise funds. As we all know, banks aren't lending to startup ideas right now. So let's say that you're a film developer and you needed £10,000 in order to develop or produce your film. Well, you could reach out to all your contacts on the social network, and a crowdfunding platform will allow you to offer rewards for those who contribute to your project that are passionate about what you might be passionate about. So, for example, if you wanted to donate £10 to that particular project, then you might be featured in the movie in their credits. If you donated £100, then you could be featured in the actual movie, behind the scenes look at how, and you can get very creative with your rewards. There's a significant amount of funding that's actually being done this way. So the first thing we wanted to launch is the ability for people to crowdfund, for those who have startups, and really step in where banks aren't lending right now or making funds available. The second product that we wanted to launch is for those who are credit-worthy, to actually get better, more competitive rates of interest, both as an investor and a borrower. So the way that it works is if you are an investor and you had £10,000 and you wanted to receive 10% return on your money, which is unheard of in a bank, then what you could do is you could simply be matched up through our platform to 1,000 different borrowers who are all looking, and we'll put £10 and allocate it, and they're all looking to borrow money at 10% interest, and you simply match the two together, and it's diversified across a pool of borrowers so that to protect you from any kind of default there. And also, we go through the same process as banks go through in order to assess your ability to repay. So this is for credit-worthy borrowers. Because you're cutting out the bank and you don't need to pay for all their infrastructure and bonuses, you can get a much, much better rate as an investor and as a borrower. So that's the second product we're launching. The third product is we're launching an equity product. So at the moment, it's really, really hard to, I've got first-hand experience of trying to get private equity and VC funding. It's only for a very small percentage of businesses out there. So if you wanted to be a venture capitalist and you had 100 quid, then you could do that by pooling you with a crowd of investors that are not necessarily high net worth, and all of you being pooled together into a group where you will contribute and crowdsource your knowledge into that as an alternative to the business angel venture capital model as well, by pooling together a crowd. Now, the next phase that we want to go through is we're fighting with the Financial Services Authority and God knows how many regulators right now in order to get a special banking license. And the way that that's going to work is, I don't know if, have we got any bankers in the room here today? Anyone from a bank? Okay. All right. Well, the way that banking actually works is that when you deposit money with a bank, they actually become the legal owner of your money. We didn't want that to happen at our bank. And when they become the legal owner of your money, they're also allowed to allocate that money how they wish. So that could go on weapons of mass destruction, it could go on funding commodity speculation, or it could be going into a property speculation and a financial crisis. So we didn't want to do that. We wanted all the depositors to direct exactly and know exactly where the money's actually going through to people that they actually can connect with, and they have faces and they have names and they understand where their money's being allocated and what it's actually being used for. And the third thing that banks do is when you borrow money, they actually create money. In the UK, 97% of money is created by a bank through when people borrow. And we believe that leads to a financial crisis, and that's the reforms we actually discussed. So we came up with a model of how to achieve banking completely sustainably and socially. And the way we wanted to do it is just quite simple. It's how most people think a bank would actually work. Well, when you deposit money with us in the current account, you remain the legal owner of that money. We don't need any government bailout. We don't need any taxpayer bailout. We don't need any Bank of England or central bank bailout. We just simply, you deposit your money and it's a safe place for you to keep your money. We don't touch it. But if you do decide that you would like us to touch that money, then we share the risk without any kind of taxpayer or government bailout or guarantee on that money. And the way that we do that is we separate the money from a current account to an investment account. And that investment account makes up a lot of the pool for the borrowers who are all looking to borrow money. So you can allocate what type of cause you want your money to go to, what type of business you want your money to go to, and we'll be pre-screening the types of businesses that will get through onto this platform. So we're looking at meeting a number of governmental objectives, which is why we've qualified for, or we're applying for, and we're getting pretty close to qualifying for a government grant in order to make this a reality. So that's the business model, but there's some fundamental principles which go behind this vision and this mission that we're looking to achieve right now as a team. The first thing is when you deposit money, the money is yours. It doesn't become ours like it does with a traditional bank. The second thing is you will know what your money is actually being used for, and you can actually see what's happening to your money well it does in a traditional bank. The third thing is we will actually use that in the productive economy. If you want to use this to buy shoes, or you want to go on holiday, then this isn't the bank to actually come to. So we only want to contribute to people that are looking to add value, create some kind of value added in some way, rather than contributing to the personal loan market. At the moment, if you're a business and you want to get a loan, you'll get chucked out of the door. If you say that you want to borrow it to redecorate your house, they'll gladly give you the money if you've got the right credit rating. We think that's a little bit backwards. But the other thing is we won't use our banking license in order to create money, which we believe is the root cause of the financial crisis and we want to create the only social network, sustainable bank that works the way people think banking actually works. And we're also adding a little bit, we've got a great team of very clever mathematicians that are putting together an algorithm right now. We don't think that credit rating is good enough. We think that social capital is more important. We believe that how you behave online, how you interact on LinkedIn, how you interact with Twitter, how transparent you are as a person is going to be hugely important about your ability to repay and the trustworthiness within this infrastructure. So we've developed a social capital score. So when we assess people's ability, it will be done first on influence, as well as their social score, as well as their traditional credit score, and as well as their identity score. So we want to know everybody that joins the network has to be a real person, have to have a real photo, and we have to verify that through a number of different measures, and they'll have a score allocated to them accordingly. So that's all I wanted to explain. That's my 10 minutes up. I've just got some details. If anyone would like to get in touch with me, please feel free to contact me in any way. We genuinely believe that social capital is the way forward, and how you're interacting online will be the future of finance. And we're going through some massive reforms right now, and we're looking to really push us through, create some kind of sustainability in these massively turbulent times. So thank you very much.